So, Milind, we've had an extraordinary high attrition rate for the sector per se. Historical hikes or the hikes at least in the last 2 years were above the historical average. Do you see a big change happening there? Will things revert back to the mean? And if that happens, then we are looking at a huge change in terms of the operating cost, margins and other factors.
I will not speculate about others, but I will speak about TCS. Our hikes.
But a good manager always tracks competition, no?
Let me just tell you. Let me start with me, and then I'll touch upon that also. Our hikes this year will be similar to what we have been giving.
Okay.
Especially for high performers, we are definitely are looking to get them to 12 to 15% hikes, and then for 8, 5, 1.5 is kind of that kind of number which is coming in. So that is good. That has always been like this. Actually, better than what we have done in the previous years. So that does not change in spite of all the things which you talk about, margin and cost. That we do it irrespective, and then we again traverse the year right together. I think, and obviously variable pay, quarterly variable pay. All of that is 100% in the last quarter. So we have to keep those things intact, irrespective of what we do, how we manage other things, and that is how TCS has been all along, and it continues to be like that. With respect to overall industry, yes, we have seen many things. We are seeing other companies, smaller companies, letting people go. I'm saying opportunities is open for everybody to take an opportunity in TCS, and people are welcome to apply, and we will obviously glad to have them.
Samir, now TCS even in last 2 or 3 quarters has really struggled to go to the upper end of the margin band, the aspirational margin band when things were looking up. In a volatile environment, what happens to that aspirational margin band? I mean, now it will look like not an aspirational band, but it may look like a dream number.
Okay, so let's look at FY23. We put out a plan in terms of how we'll get back to a thing, and for most of the quarters, we stuck to the plan. Given that there was an immediate fall on revenues, whereas in the short term our cost remains sticky, is where we couldn't exit at 25. I think we have significantly invested into building our cost structures, which would be better, which was starting with 3-4 quarters back in terms of flattening of pyramid, then looking at not increasingly backfilling attrition with lateral hiring, looking at subcontractor structures, and all of it is a continued exercise where we are looking at cost structures, which will help us. And as I've always said, our long-term cost structures are well placed for us, which we as a management team believe that we can operate in 26 to 28. The volatility impacts in the short term, but we definitely believe once things stabilize, we can revert back to our long-term cost structures, which would be then operating in a comfortable band of 26.
So Samir, while we can judge the numbers by saying that okay, it was the slowest quarterly growth in last 10 quarters, margins were under pressure despite the currency tailwind. One thing is clear, if I summarize by saying that next 2 or 3 quarters would be hard to call given the macro dynamism. Will that be a fair assessment?
Yes, given the uncertainty, we would believe that we'll have to play it one step at a time rather than taking a forward view on it.
And it will be tough to get double-digit growth in FY24.
No, I would still aspire to get to double-digit. Depends on how it plays out.
Okay, well, wonderful. Good luck. And thank you for joining us. And for the moment, it's back to the studio.